Good morning and welcome to BloombergQuint Mornings. This is Indian Open and I'm Niraj Shah.
Well, good morning. I'm Menaka. It promises to be an interesting Monday. Don't forget, we've got that big national BJP leadership meet underway, and we hope to hear from Prime Minister Modi.
Absolutely. Good morning. I'm Ira Dugal. These are our headlines. It's a mixed start to the week for Asian markets. In Japan, speculation that Prime Minister Shinzo Abe may press for a stimulus package and call for snap polls. Donald Trump brings in a new travel ban covering 8 countries to replace his earlier executive order, which was set to expire soon. Angela Merkel wins a 4th term as the German Chancellor, will now have to form a new alliance as the far right makes a debut in the German parliament. Shopper Stop is Amazon's first investment, albeit a financial one, in an Indian brick-and-mortar store. The Indian company will see 5% stake picked up for 180 crore. And the Income Tax Department says Cafe Coffee Day founder VG Siddhartha has confessed to more than 650 crore in undeclared income.
Well, that's a large number, all right. But let's look at the trade setup for the day. And remember, in Friday's session, it was a weak day of trade. Sensex corrected about 1%. Banks actually corrected more than that the whole of last week, and particularly Thursday and Friday. So in this expiry week, banks are looking particularly weak. There's a muted response to insurance IPOs, and that probably suggests the market is now getting a bit wary of what's happening with companies or counters with expensive valuations, be it in the IPO space or be it in the secondary markets as well. So that's something that participants would be keenly watching out for. And remember, the index is sub almost all the key short-term moving averages. VIX has jumped up. Let's see if this expiry week promises to be a week of heightened volatility or no. The only solace on Friday, if you can call that a solace, is that IT selectively saw some strong delivery-based buying. Stocks like HCL, Wipro, etc. The delivery percentages were northwards of 65-odd%. In the case of HCL Tech, about 75-odd%. So that is probably a bit solace, but no longs initiated on any of the key indices, including IT. In fact, all the key indices in Friday's session had short build-up that we've seen. So what we'll watch out for, as we said in the headlines as well, I think Prime Minister Modi likely to dispel the economic concerns at the National Executive Meet today. That is something that we'll be watching out for. Fiscal deficit data to be released later on in the week. That is top of the mind. And of course, the FNO expiry week. The options data suggests a range of 10,200 to 9,900. That range hasn't changed. Can a day or two of a substantial downtick or otherwise change that range remains to be seen. For now, the last few days, this has remained that strong band in which traders are operating. Let's wait and watch. And the key stocks to watch out for. Yes, Shopper Stop. Remember, the deal has not been done at a premium. In fact, it's been done at a discount. But the name of the investor coming in, Amazon, could well get the stock excited. I'll be surprised if it doesn't. So let's see if Shopper Stop reacts indeed to Amazon's investment. Two-wheeler stocks could be interesting. Post what Honda has done in that festive offer of one day and a big upgrade. And of course, we'll be speaking to the management in just moments from now as well. So that's something that you would watch out for. And Capsite Infra Projects listing today was subscribed 186 times. So while the insurance IPOs didn't see a good reaction, Capsite could be an interesting one.
Imagine, people don't want to buy insurance, they want to buy infrastructure projects at this point in time.
Pricing.
Yeah.
All about pricing. So
yeah,
that's the interesting one. And of course, I think we'll be watching out for all of these CCD, Sickle, Logistics, etc., as well as Oberoi. While we talk about land deals not happening, here's Oberoi winning a 550 crore Glaxo land parcel. And typically they have this tendency, because they are cash rich, to buy large land parcels at opportune times.
It's a slightly more conservative builder amongst the rest of them, isn't it?
Yeah, and a builder whose company markets quite like as well. So I think all the brokerage notes are also suggesting that this is a great deal. Let's wait and watch.
Okay. Niraj unfortunately stole some of my thunder this morning. A couple of the stories that we've got lined up for you on First Word today are already mentioned by him, but let's run you through what we think are the most important stories this morning. Britain got downgraded last week. It's a disappointing victory for Angela Merkel, and there's talk of another stimulus in Japan. What does that mean for the pound, the euro and the yen? The fiscal stimulus buzz in India has been growing louder, and Prime Minister Narendra Modi may make some big announcement at the BJP's National Executive Leadership Meet that's underway today. Is there space for a stimulus? But more importantly, should the government be reactive? Online meets brick and mortar as Amazon invests 180 crores in Shopper Stop. It's a small amount, but the outcome promises to be interesting. And it's a cracker of a start to the festive season for Honda Motorcycles and Scooters India. It sold 50,000 units on day one. We speak with the two-wheeler maker's sales and marketing head, Y.S. Kuleria. So, bunch of stories there. Let's kick it off with the BJP National Executive Leadership Meet, but more importantly, the economy. And it seems that we can't escape the fiscal stimulus buzz this morning, Ira. It's all around us, whether we like it or not.
I think it's become pop culture now to suddenly talk about a stimulus. This is the reactive nature of, discourse on the economy. You go from thinking that everything is fabulous to thinking that everything is absolutely down in the dumps. It's neither, by the way. But let's, try and understand what we're talking about here. Firstly, today you will hear something perhaps from the Finance Minister. Press Trust of India reported that there could be a bunch of small measures, perhaps, more on the affordable housing, perhaps something on SME credit. You could perhaps see something around consumers. That's something that PTI has reported. We don't have any confirmation of it. But we can tell you what line the finance minister took. He was at a Bloomberg event on Friday, and he was actually very, very balanced. Sure, the constituency he was addressing was bond and currency market traders, so he had no option to be absolutely balanced. But he was very clear that you have to balance any talk of a fiscal stimulus or fiscal push with the fact that you've come through a lot of hard work of consolidating the fiscal account, and you probably don't want to throw it away. So at this point, if you're looking at stimulus, what are you talking about? One thing is very clear, that if you do anything to put money in the hands of consumers, it'll probably do very little for the broader economy. It will spark inflation, and also it'll complicate monetary policy. You more or less, hit the bottom of the rate cycle. You don't expect very much more, except for perhaps another 25 odd basis point cut. But if you do get into an inflationary cycle, then monetary policy and the reversal in monetary policy could come quicker. The other thing is on the infrastructure stimulus side, you can do stuff. You can talk about more spending, but that's not something that's going to hit the economy immediately. So, you have to again balance out the risk to the fiscal account versus the additional spending. There has been a focus on housing. We've seen limited bits of information coming in on a push to affordable housing. They can continue with that. Housing always has a good multiplier effect. But I think the things that they can do right now, the smart thing to do is find a way to push non-tax revenues. You have limited, perhaps, control over tax revenues. But if you can keep the non-tax revenues growing through divestment, etc., at least you can not cut back on planned spending. That is something that you shouldn't do. If there is some sort of working capital stress in the SME sector, however temporary it may be because of GST or otherwise, you can try and ensure that that doesn't hurt the economic cycle. You can push for greater credit flow to SMEs. You can try and get banks to lend more, but there you have that balance sheet problem which continues to come in the way. But that's something you can do. And finally, again, on the export sector, you can't do anything to change market shares rapidly. You can't do anything about the currency, but you can, again, take care of some of the nitty-gritty issues resulting from GST, etc., supply chain disruptions. You can try and tackle those. So I think that's what the discourse on the economy should be.
So the GST bit, let's assume they've already said they were going to refund some money and create some. I know Nikunj reported that they were going to create a fund, and through that they were going to do that. Just a counter question. I know you're not a believer in the reactive stimulus conversation right now, but would it work to their favor if they were, given the slight headroom that inflation gives them right now, assuming that we'll have stable inflation and things will not spike very soon, and the fact that they want a cheaper currency, because that too will have some salutary impact on exports, would it make sense for them to consider breaching a little bit the fiscal deficit?
See, you may end up doing that in any case, right? I mean, even with current spending plans, you don't know that you're going to meet the 3.2% number. Depending on how tax revenues pan out, maybe you're in a situation later in the year where you, in any case, have to, and then you have to manage the conversation. You have to tell the markets that, look, this is an exceptional year. We've had 2 structural reforms, and that has led to this. Now, before you hit that point, if you start adding some sort of spending, then that is irresponsible.
No, I agree. I'm not suggesting at all that they ought to be doing it. I'm just trying to think through what their thinking might be and how they may justify something like this, given that the mood has definitely turned in the economy, right?
Yeah, so I think the point I'm making is that don't react to the mood, react to the data and the fundamentals. And the data
But the data is not looking very encouraging
Yes,
either,
the data is not looking very good, but not on the consumption side.
Yeah, I agree. Not on the
There are
consumption.
no
If there's
short
anything that's
fixes.
holding up, it's the consumption side.
There are no short fixes to the problem we have right now. Some amount of upside will come naturally as these, GST disruptions fade, perhaps, and perhaps some, demonetization. If it's not a hard hit to the supply chain, that should fade as well. The investment side, there is no short fix. The export side, there is no short fix. Don't try and come up with short fixes. As Jahangir Aziz said, it's always ended up in tears. I'm going to borrow that from him.
Yeah, I know. That was an interesting quote because it just reminded us of every time we've done fiscal stimulus, whether the Prime Minister is Pranab Mukherjee or Arun Jaitley, we've suffered for it, right? So, all right, that's the economy story. But there's one part of the economy, Niraj, that's holding up, and that's the consumer bit. And you can see it in some of the deals taking place right now.
Yeah, so more ways than one, either the sales or deals or more. So let's talk about the deal, Menaka. And Shoppers Stop and Amazon have joined hands to take on competition in the Indian fashion retail space in a deal that was announced over the weekend. Amazon's investment arm will buy a 5% stake in Shoppers Stop. Agam Vakil is standing by with the contours and the synergies of the deal. Agam, win-win for both parties?
Well, in the way it's looking like, it certainly is an advantage for both parties. Now, the investment that Amazon is making in Shoppers Stop is not substantial. It's about 5% and it's worth 180 crores. But it is more about the significance of this deal. So let's talk about how this plays out in terms of advantages for both. Starting off with the Shoppers Stop, firstly, it will have more funds, about 180 crores that it can invest in its current stores and also its store expansion. But more importantly, considering the fact that only a little over 1% of Shoppers Stop's entire sales comes from the digital side, Amazon can actually help build the digital sales for Shoppers Stop, considering the fact that Shoppers Stop will get to list about 400 of its brands on Amazon. In turn, of course, Amazon gets an addition of 400 brands. But more importantly, from Amazon's point of view, it will have access to Shoppers Stop's physical network. From what I've read is that Amazon will set up, experience centers in each of these Shoppers Stop stores, which will have an increased visibility for Amazon in perhaps the relatively smaller towns. And other than that, of course, Amazon will also have access to the unpenetrated and unorganized fashion retail sector. This is according to the management, as BloombergQuint had reached out to them. And they also suggest that both firms will work together on multiple marketing programs. So these are some of the advantages that can be seen, at least for now, for both Shoppers Stop and Amazon.in.
Yeah, interesting deal.
Yes, interesting deal. So, two ways to look at it. One, is it something that will, in a manner of speaking, save a Shoppers Stop, so to say? Because if you just, it's been a really stable performer for the last 10, 15 years. But if you just look at what's happened, Ira and Menaka, over the last 3 years, say, for Shoppers Stop. So, we have a small comparison here on the screen, FY15 to FY17. While revenues grew and grew okay, EBITDA slumped from 183 crores to 118 crores. Margins naturally came off as well, so from 4.4% to 2.1%. And return on capital employed from a 4.7% to a negative 2.4%, by the way. So return on capital employed is negative in FY17, the last reported numbers. So it's not been a terribly happy time for Shoppers Stop the last 3 years.
Actually, it's the weakest of the retailers, isn't it?
And Govind Srikande's the managing director and the customer service executive, as he calls himself, he's got 2 designations, so to say. But his last reported interaction post quarterly numbers mentioned that the only way he believed that Shoppers Stop can come out and start rewarding shareholders, they don't say that we'll come out of the slump, they say we start rewarding shareholders, is if indeed they pursue this omni-channel strategy effectively.
I think 1%, didn't Agam say 1% of their sales come from online retail of any sort?
Yeah,
right?
so they want
So this has to be good news for them. It can't be anything but good news for them,
True.
right? They get the big Amazon push. The question here is Amazon and all these online guys are deep discounters.
Yes.
So what does it do to? I know that in a couple of interviews, because obviously everybody's been writing about this over the weekend. In a couple of interviews, he suggested that they weren't going to deep discount. I don't know how he's going to escape deep discounting, because you want to be on the platform, you are going to deep discount, right?
But isn't Amazon looking at this largely as a financial investment?
So it's the financial arm, yes, and it has to be the financial arm because FDI rules otherwise would create a bit of a stink, right? Even now, there are people that are going to raise questions because at the end of the day, it's Amazon's financial arm, and FDI and multi-brand retail is such a controversial space here in India. But that aside, it's only 5%, it's 180 crores.
Yeah.
You know, in financial terms, this is a meaningless investment, really, by all measure for Amazon. I mean, the size of that company. And maybe not even so dramatic for Shoppers Stop because it's really only 180 crores. If you're, I mean, how many stores can you build out through 180 crores, really?
It's just that does it portend for a deeper partnership later down the line?
Yeah, and most exciting, just think Amazon Whole Foods acquisition, right?
Yes.
I mean, how can you ignore what Amazon's been trying to do, which is this curious mix of online and brick and mortar. And Whole Foods was the best example you can have of that, right? That's one. Secondly, big focus on data. Shopper consumer data, right?
Yes.
And that's going to be the big thing that will play out for Amazon even through Shopper Stop. They will just be able to add to all the intelligence that they have on consumer trends in India. And then I think they also spoke of a small shop-in-shop experience for Amazon in Shopper Stop stores. I don't think that really means much for Amazon. It's just really going to be these two things. You keep trying new ways of making sure that you've got touch points with the consumer and data coming in.
Yeah, but I think from a Shopper Stop perspective, which is the listed entity, I think 2 or 3 questions, frankly, to my mind that stand out after reading all that I've done over the last 2 days. One, can FY18 growth, which they have forecast at 8 to 10%, can that meaningfully change in FY18 itself, or are they looking at FY19, FY20? Because they did mention that this will take their online sales to a 10-odd% over a period of time.
No, you don't go from 1% to 10% that quickly, right?
Over a period of time. But can FY18 show that growth as well? Because that will be meaningful for the stock. One. Two, whether in the margins, in the end of Q1, they guided to a margin expansion of 100 bips, which people were surprised, but they said they will stick to it. Whether this was factored in, or can they go beyond that? So that is 2. And can the omni-channel strategy for with Amazon essentially get Shopper Stop to profitability quicker than what was otherwise believed? So I think these are 2 or 3 things that people would be watching out for. The interesting thing would be what the other retailers react. Let's wait and watch today.
All right, we've got, this is not the only consumer story we're talking about today. This consumer holding up in India's strength continues. Honda had a blockbuster start to the festival season, 50,000 units sold, which I think data tells us is almost twice or more than what they sold same day last year, or same first festival day last year, which is the first day of Navratri. So that's Honda for you, and an interesting story there of how well the two-wheeler space is doing, especially for Honda, both bikes and motorcycles, but we don't have the breakup.
Yeah, maybe the consumer space bulls would be, if they were hoping for some vindication of their belief that, okay, consumption is all right, maybe this is one such reason. We'll have to figure out the touch points, quite frankly, and figure out whether they are so bullish about the season going ahead as well.
Was there any discounting? They put out a huge amount of discounting before
They put out a huge amount of discounting, but I think Mr. Guleria, we'll just get in Mr. Guleria in just moments from now. But I think in the conversation he did mention, I read it, that he said that they had given out discounts and their production was up to speed, and therefore they were able to offer the models that were in demand. A lot of people may not be able to match the demand. They gave the discounts in just the perfect fashion because they anticipated there will be a surge. They didn't anticipate such a surge, and I think we'll get in Mr. Guleria to talk about this more. But I'm just kind of speaking out what I read, that the production facilities are up to speed, and therefore the numbers are looking so good.
Yeah, but there has to be intrinsic demand there, right? So I mean, they've got that demand, which is very interesting. I'd be very curious to hear where he's got this demand from, the rural urban breakup, the centers.
Yeah, we'll have the management join us later on through the course of Indian Open. But that's it right now for First Word. We'll come back with many more of these stories and more angles to them. I think we should move on to a quick F&O check at this point in time.
Yeah, so let's get in Agam really on to talk about what's happening in the derivative space as well. Full tilt towards the markets now. Agam Vakil, expiry week, what is it that traders are betting on?
Well, you know, Niraj, it was a tough day of trade when it comes to the bulls on Friday, considering the fact that Nifty lost out on 10,000. That said, there has been a lot of addition towards the short side when it comes to the October futures, and that goes for the Nifty futures as well as the Bank Nifty futures. Coming down to the India Volatility Index, and understandably so, we have seen a spike of as much as 10%. It has moved above the mark of 12, and this is something a lot of analysts have been talking about, which means that there could be more volatility possible, especially given the fact that we are moving into expiry. Considering the fact that we've seen the Nifty come down, we have also seen the Nifty put call ratio come down to 1.24 from 1.51. This also means that there has been more amount of call writing in the upper level calls. Speaking of which, we have seen more addition in the 10,000 call and the 10,100 call. On the other hand, since the Nifty came off, we also saw a lot of unwinding in the 10,000 and the 10,100 puts. Coming to stock futures, we do have DLF, which has entered the ban. On the other hand, JP Associates moves out of the ban. It was a very weak day of trade for a lot of stocks, so we did see short accumulation, HCC and Reliance Capital, of course, which also saw a 12% addition in open interest. On the other hand, a long unwinding seen in Torrent Pharma, where its open interest went down by 18%. But once again, we will all be keeping an eye on the indices, especially given the fact that we are moving into expiry now.
Okay. Thanks a lot for that, Agam. Let's get in Abhijit Pathak, Director at Definite Solutions, with his thoughts on what the expiry week could show us. Abhijit, good morning. Thanks so much for joining in. What's your sense? I think the options data suggests a band of 9,900 to 10,200. What would be your thoughts on what the expiry week shows us?
Yeah, for this expiry, breaking of 10,000 was not very good for Nifty on Friday. But below that, at 99.60, 99.50, there is a good support level. And if that is held, Nifty can go up to 10,030, 10,050, which will be a resistance now. I mean, bulls will be safe only above 10,050.
Okay, so
one interesting thing which I have seen is the put call ratio of October Nifty strike prices has not deteriorated so much as that of September. That is something interesting.
So what would be the derivation then, Abhijit? I mean, for an average trader who is looking to trade either the Nifty or the Bank Nifty, what's the trade option available to him?
Yeah, right now, if it is, I mean, if Nifty opens flat and if 99.50, 99.60 is not broken in the first 15 minutes or half an hour, they can go long for a target of 10.20, 10.30. Or if it opens gap up and it cannot cross 10.30, 10.50, they can go short with the target of the Friday low.
Okay, that's interesting. Abhijit, if I looked at indices within the index last week, almost all had a short build-up. But banks, particularly Thursday and Friday, I thought saw quite a bit of short build-up, both on the index front as well as on the large-cap banking names. What is standing out there?
Yeah, actually, it's another interesting thing that it looked quite bad price action on Friday. But if you look at the Nifty spot, Nifty futures, Bank Nifty spot, Bank Nifty futures, all just filled a gap on which was created on 8th September. And that was filled and it did not go below that. So that's why I'm looking at those levels, 24,400 on Bank Nifty and 99.50, 99.60 on Nifty. If that is held, then I think it might not be a weak expiry as everyone is expecting and as the data is showing.
Okay, so I think those levels are crucial to watch out for. Maybe, I think what Abhijit Pathak is trying to say is that the Bank Nifty could well be a determinant of how the expiry turns out to be as well. Abhijit, IT stood out, and I think you have a call on one of the IT names as well. What's happening here?
Yeah, TCS has been consolidating for a long time, and it has given a small breakout. So it is worth taking a long position on dip near 2500, 2510. With the stop loss is a bit far off 2440, but if that, I mean, if it goes up, it can go up by about 100, 150 points to 2650 TCS.
Okay. So TCS is a buy on a dip to 2500, 2510 with a target of 2600 to 2650. Fair call, Abhijit. Many thanks for that, Abhijit. Thanks for joining in today and giving us your thoughts on the options data and, of course, some specific ideas. TCS is the solitary buy call from Abhijit Pathak this morning.
All right, we were discussing Honda motorcycles and scooters having a cracker of a start this festive season. We have the management with us, the head of sales and marketing, Ira Dugal, joining us this morning to talk us through, the kind of season that this festival season is turning out to be. Good morning, Mr. Guleria. You had a great first day of Navratri. Can you talk us through some of the details in terms of customer response, discounts, and the mix between scooters and bikes that you sold?
Yeah, a very good morning to you. So as far as Honda is concerned, we had a very good start on the Navratras, and as we already shared with the media on the day one, we were able to sell more than 50,000 units, and we have been able to retain this growth despite the second day of Navratra. Almost the northern part and central part of the country, as well as the western part, they were heavy rain. But despite that, we are still maintaining more than 50% growth. And what is significant that the growth is coming both from the motorcycles as well as from the scooter segment. So that's very heartening news for all of us as well as for our makers.
Can you give us some comparative numbers? I'm told you sold 50,000 units on day one. That's what? About a 50 to almost 80% hike. Same first day of Navratri last year?
Your voice is having a lot of echo. So I'm not able to...
Allow me to repeat my question, Mr. Guleria. We were just trying to understand how this year's first day of Navratri sales of about 50,000 units compared with last year's first day of Navratri.
Yeah, you have asked me about the last year Navratri sales on the first day.
What were the numbers then, if you could just briefly run us through?
We sold last year 24,000 on the first Navratra in 2016.
So you've done double the amount. Can you talk us through pricing and model strategy to give us a sense of what or how you explain this kind of customer reaction?
Yeah, first of all, we do have, aggressive expansion in our network itself. Like this year, we plan to add almost 500 additional network, and we have already added close to 200 plus network in the first 5 months, which has helped us to, reach the last mile nearer to the market as well as the customer. Plus the expansion of the model lineup, we had additional product launches. Even in this year, we have the Click launch coming in. And then, we have, even for the festival, several schemes and offers for the customers, especially the government employees, and at very attractive finance scheme, which is almost leading to a saving of 5,500 to the customers when they buy any Honda motorcycle or a Navi. So, coupled with these things, the additional production capacity, because the original plan of our additional 11th line in the third factory in Bangalore was planned around October. But then with the very good planning and very strategic advancement of the inauguration of this line, on very timely introduction of additional capacity of 50,000 two-wheelers per month, that also helped us to give additional vehicles in the market to our network just ahead of the festival season, so that the availability of the stock in the right quantity mix and the model mix is there in the network before the festival begins.
Mr. Guleria, good morning. Typically, industry players keep a tab on competition as well. You believe this will be a Honda-specific phenomenon, or the industry by and large is having a decent start to Navratri sales? Two-wheeler industry.
Well, Niraj, you are right that we do have to keep the eyes and ears in the market. But obviously, the first 2 days, since they have gone very good for us, we are very much focused. How do we keep this momentum on in the balanced festival days of Navratra? So I would not be in a position to comment on how is the condition there. Obviously, there are a lot of customers in the market, but the initial feedback we do have that the footfalls at Honda network are relatively higher than what can be observed at the other competitor outlets.
Mr. Guleria, I have a question on, what kind of strength you expect in consumer demand in the weeks and months to come, and whether, all the GST issues that industries like yours have been facing have been put behind them for now, or are you still fearing some sort of disruption on that end?
First, regarding the GST thing, I think we had a smooth transition. Obviously, the first 15 days or so in the month of July, everybody was, aligning themselves to the new tax regime. But we were the first manufacturer, in fact, who advertised on the first date of July itself regarding our new prices and passing on of the benefits of the GST to the consumer through advertisement as well as on our website. That early bird mover advantage to us really helped to clear the doubts of the consumer whether the benefits have been passed on or not. So after 2 weeks, we could see at our network the customers were back. They were very clear what are the prices because they could confirm from the website of the company as well as from our network. And that helped us after a fortnight of July to really get the conversion as well. But yes, we lost those 15 important days of the month of July. But there was a comeback from August onwards. And now, since we are all into the festival season, and traditionally, even the rural market do have, high seasonal sales during these festival Navratras up to Diwali and Dhanteras. So we expect that such kind of momentum backed by the positive sentiments and good monsoons so far, except few parts of the country, would also get us additional demand from the rural. Urban and semi-urban was already maintaining growth momentum of double digit in the first few months of this financial year. The only thing was when the rural will fire. And this is the time when the rural will also give that additional volumes to the total two-wheeler sales.
So, Mr. Guleria, if we hear you right, you're saying that urban and semi-urban was doing well, rural you see picking up. This is pretty much across the country. Again, I know we're trying to extrapolate, from your sales as to what the consumer economy is looking like. But if what you're saying is anything to go by, it suggests that it's holding up. I mean, there is a bit of negative mood in the market right now in the sense you're hearing a lot around, the economy slowing down, but doesn't seem to be showing up in the consumer segment.
As far as two-wheelers are concerned, I can tell for Honda data that all 5 regions in which we have divided our country into sales zone like North, Central, East, West and South. So all these 5 regions, we have added volume as well as our market share has increased. So I would say all cylinders firing for us, and we do not see any region having a negative growth for Honda two-wheelers. So that more or less, says that in fact all the different geographical regions of the country are showing a positive sales momentum.
A quick last question. Can you leave us with your market share numbers, the recent ones that you may have, sir?
So we are at 30% plus market share in from April to August.
30% plus market share, April to August.
Yeah, this is the highest market share for Honda in the domestic market.
So how much have you been able to grab additionally this quarter?
So 3% we have added compared to the last year.
And which unfortunate competitor did you grab it from?
Pardon me?
Which unfortunate competitor did you grab it from?
So I think I leave this to you guys to find out.
All right. Mr. Guleria, thanks very much for speaking with us this morning. Interesting insights that are coming in from Honda on a great start to the festive season, strengthen the consumer economy. More power to Ira's debate. Don't react to the fiscal stimuluses yet. You might actually see things look better in a few weeks from now.
Yeah.
Hey, by the way, sorry, I just wanted to add one more thing. Since we've been speaking of the consumer economy, Shoppers Stop, Amazon, Honda Motors, let's also point out to our viewers that on Indian Open today, we'll be in conversation with Harsh Mariwala of Marico. Mr. Mariwala will talk us through his view of the economy, of course, his view of the consumer economy as well, and the key challenges facing business. That's Harsh Mariwala coming up this morning at 9:30 a.m. That's an interview you want to make sure you stay tuned for.
You bet. But moving on from consumption to market, full tilt. And let's get in all our experts to talk about what could be the trading pattern for the day today. Well, we'll also talk about the two-wheeler space, because if the Honda commentary is anything to be believed, and if the CLSA note that has come out on autos this morning is anything to be believed, then autos are probably in the fast lane. I think CLSA summed up that trucks have grown actually 42% in the month of August, and they haven't come out with the September data as yet, naturally. It'll be interesting to see what happened to the auto space. It's also very interesting to see what's happening to the commodity space this morning, and Pradeep Pandya joins me on Indian Open to talk about that. And Pradeep, good morning.
Good morning.
What's happening in that pocket?
Well, oil is a little strong, gold is weak, and if you look at other metals, the picture is mixed. So to talk about oil first, we have been tracking this over last weekend as well, and there was an all-important meeting of oil producers. if you look at the reports coming out of that meeting, most of the participants were of the opinion that probably this is too early to take any call because the previous agreement has got 6 more months to run, and therefore the announcement will be made by January. But it's highly unlikely that there will be any disagreement, and this production cut agreement won't be extended. So there is a high probability of the production cuts getting extended or deepened next year, and therefore if you look at it, around $51 and $57 is what you see for WTI and Brent this morning. So that looks quite firm. But gold is soft because dollar has gained a bit because of political uncertainty in Germany, because although Merkel is most likely to come back to power, but not the victory is anything but impressive, and therefore euro is soft, and also there is likely that there could be an announcement of a stimulus in Japan. So yen is also looking a bit weak, and therefore dollar has gained, so that is a loss for gold. If you look at other metals, the picture is mixed, I would say. Zinc and copper are up, while steel and aluminium are trading lower.
So it's an interesting assortment of data that we have today. Pradeep, lots happening in the consumption space, quite a bit of activity in the two-wheelers or the auto space as well, and some interesting deals in the Indian retail space. So all 2 or 3 pockets to watch out for. Let's get in Mariwala Joshi, Angel, to talk in about all of this and more. Mariwala, good morning. Thanks so much for joining in. We may have the PM speaking as well, and hopefully, or rather, get some more light on how the economy is faring and if there are some measures that need to be taken. But I don't know whether you heard the Honda management just before, and you probably have seen the news as well. If that is to be believed, some discounts or otherwise, one pocket or one engine of consumption, which is autos, seems to be clicking very, very well. One, a view on autos. 2, would you extrapolate that to the entire consumption basket?
So morning, Niraj. Largely, again, if you look at the dynamics that the auto industry is going through, again, the key triggers for the entire consumption story is how discretionary demand is kicking off. And in that sense itself, good monsoons obviously act as a precedent in terms of having that discretionary spending come through. Having said that, in terms of the festivities coming across and the DST destocking that we saw, the restocking effect is obviously going to take a lot in terms of volumes and numbers. So if you like the numbers gone by, the numbers have been an encouraging trend, and these festivities would continue. To a large part, at the dealer network, at the stockist network, obviously you're going to take a lot of input from the main suppliers and the manufacturers themselves. So yes, I think auto as a story should do very, very well in my opinion. Whether you should bet on two-wheelers, four-wheelers, I think selectively both these pockets look very, very interesting. I was hearing the Honda management team, yes, the numbers look very, very impressive. But even if you look at the Hero MotoCorp's management, even before this quarter's numbers, they're very, very hopeful of a double-digit volume growth. The input cost increases can very well get mitigated with price increases marginally coming through, which probably takes a toll in terms of how their margins might not get affected. So they stabilize their margins to that bit. So yes, I think I remain optimistic on the auto space. Hero MotoCorp obviously remains one of my favorite picks. It always was. I think there's a good enough story to build up out there. Maruti from the four-wheelers still looks very, very interesting. And the entire consumption theme or basket probably looks very, very interesting as well, because India is a consumption-driven economy over the next 4 to 5 years. And if you have the landscape put out, I think people are going to go up the value chain. So rural, semi-rural are moving up the value chain in terms of even the small packets. So yes, I think consumption.
Do you expect the government to come out with a fiscal stimulus plan?
I think a booster might be required, because if you look at the core numbers, and obviously there's nothing new that the market is not aware of. So in terms of fiscal spending, we've already reached the 90% mark. The government is very, very focused in terms of the divestment expected to go through, either in terms of new listing for insurance players or something out of the sort of getting that target of 72,000 crores. Whether that will suffice in terms of even the capital advocacy required to be provided for PSU banks, which needs to be given in terms of balance sheet expansion and growth, because credit growth is still languishing. Yes, a package of sorts is expected, but the markets probably are taking it the other way around. They're expecting, if the package comes through, what kind of an impact it will have on the fiscal deficit side, the GST refunds, whether you'll have a sovereign downgrade. I think it's too far-fetched in my opinion at this point of time.
So you mean to say market is not really too enthused about fiscal stimulus?
I mean, markets are not in the sense because the fiscal deficit might get breached and the sovereign ratings might get affected. But my opinion is different. I think for an economy like India, if you need that package to come through, you need that package to come through.
Yeah, I don't know how much of a room do we have to do that, and whether a number of 20, 30, 35,000 crores or 40,000 crores as the number maybe, and if there is a number in the first place, whether it really changes the dynamics too much. But Mayuresh, one quick question on the other big stock newsmaker of the day today, Shoppers Stop. Is this a game-changing deal for Shoppers Stop? Because they've had a slightly torrid the last couple of years, if you will.
So it might be a game changer for them, because if you look at core numbers coming through, I think the numbers were not impressive at all. So you've got very lumpy numbers projected, because in the festive season and close to the festive season, you do get same-sales stores growth actually starting moving up. But largely, again, I think the numbers have been very bumpy. Will this deal be a value changer or a game changer in terms of numbers? I think sentimentally positive for Shoppers Stop. How the numbers pan out, I think the numbers will do the talking in Q3, Q4. But yes, I think sentimentally, yes, it's a positive for Shoppers Stop.
What do you like in this sector? Is Shoppers Stop your top pick or something else?
No, so I think if you look at various business models, I think, and retail as a space in general, since the DMart listing, I think the valuations thereof have become very, very far-fetched. Is the growth coming through in the proportion that one really requires it to be happening? My own sense is that there is reasonable amount of growth in the sector, because as I said, as a consumption-driven economy, we probably have the right engines in place to drive up consumption demand in a big, big way, specifically in semi-rural and rural areas. Whether that will happen immediately, I think it's obviously going to take time. But yes, I think if I have to pick and choose, I think future consumer from the future stable might be one stock, but even that has moved up significantly. So one really needs to wait. Not now. You really need to wait for declines.
Okay, so that's the lowdown on the retail space. Interesting thoughts from Mayuresh as well. Let's wait and watch and see what Shoppers Stop does in the session today. But a bunch of other stocks in news. Oberoi, an interesting one as well. And we're getting strategy notes by the dozens these days, but this is an interesting one from Deutsche Bank. So Shraddha, Darshan and Jayesh with complete lowdown what else you need to watch out for in today's session. Darshan, let's start off with you. Deutsche Bank note.
See, what they're saying in the note is that they're bullish on the gas stock. So what they've said is that the gas sector in India has actually not seen any kind of re-rating, despite the fact that earnings were good, and there is a very limited chance for an earnings downgrade that could come in. Apart from it, they are also saying that they see an opportunity and compelling reason for a re-rating as far as this entire sector is concerned. So some of the stocks that they have named, first of all, it's Petronet LNG, which remains one of their top picks in this sector. Apart from it, they've also added a couple of stocks in their model portfolio. So Gujarat State Petronet, that is GSPL, as well as Gujarat Gas has been added to their model portfolio, and Gujarat State Petronet also remains one of their top picks among the other stocks. Now, as far as their model portfolio is concerned, what they've done is the key themes that they have named in the model portfolio include rural reflection, robust government spending, and beneficiaries of global growth stabilization. Overweight on energy, materials, utilities, IT and consumer, and underweight on telecom, healthcare, financials and consumer staple. Now, the changes in their model portfolio. First of all, the stocks that are added, GSPL, Gujarat Gas and Tata Steel are the counters which have been added. What has been removed are counters like BHEL, Idea, Ultratech Cement and Wipro. These are the companies that they have removed from their model portfolio. The weightage increase in their model portfolio are for counters like Reliance, HUL and Infosys, and the decrease as far as weightage is concerned is on ITC. But basically what they're saying is at this point of time, despite the changes in their model portfolio, they are extremely bullish on some of these gas stocks, the mid-cap gas stocks as such.
So any particular name or two names that stand out?
Yeah, so Gujarat Gas and GSPL.
Okay, so Gujarat Gas and GSPL, that's, well, the crux for a stock specific derivation out of this, Gujarat Gas and GSPL. Thanks a lot for that, Darshan. Shraddha, the stocks in news today.
GSK Pharma to start off with, because they've sold a land parcel worth 60 acres in Thane to Oberoi Realty for 555 crores. Of course, we'll talk more about Oberoi Realty going ahead. But VST Tillers, they have entered into a technology transfer agreement with a Korean company to be able to manufacture higher horsepower, higher HP tractors. Now, what is this deal? VST will pay a lump sum technical fee, and in addition, there'll be a royalty fee payment over the period of 6 years. They haven't disclosed these amounts, but we may see some reaction there. Godrej Industries is another stock to keep an eye out for on the back of Godrej Agrovet IPO, which is expected to open on October 5th. We have Indian Hotels, their rights issue will open on 13th October. More importantly, the board has set the issue price at 75 per share versus a current market price of 112, so significant difference there. And lastly, we are also tracking matrimony.com. Now, PNB Paribas Advantage, which was an anchor investor when the IPO opened opened, they sold 1.4 lakh shares at 817.7 rupees on Friday, and Matrimony, of course, has been in the news. They've already lost as much as about 16% or so in the 2 sessions since listing. So bad news for Matrimony continues.
Yep, indeed, and the stock market reaction is testimony to that as well. But could there be an interesting reaction for Oberoi? Let's not get into that. Let's just talk about the deal, Jesh. It's an interesting one.
Absolutely, Niraj. So first the news that they have emerged as a successful bidder for acquiring 60 acres of land in Thane from GSK Limited. That is for a consideration of 555 crores. Backed by this, there was very interesting note come in by JP Morgan. So they have a target price of about 440 on the stock. But what they mention is that Oberoi's historical timing on land purchases has been very impressive, and this too appears to be on similar lines. The other one is from CLSA, which has a target price of more than 500 rupees on the stock, and they expect that this land deal could add nearly more than 50 rupees per share to the net asset value. Morgan Stanley too believes that this deal could add 35 to 40 rupees of net asset value, and they have a target price of about 400 rupees on the stock. So overall, Niraj, positive views coming in for Oberoi.
Yeah, let's wait and watch how it reacts. Thanks a lot, all of you, for joining in today and giving us that perspective. Mayuresh, let's talk about the gas names. Deutsche Bank is one. I think I've seen one more note earlier, Macquarie or somebody else come out, or Morgan Stanley come out and say that the gas space seems ripe for stock picking. What are you advising your clients to do? What are you buying within the portfolio schemes?
So I think the gas distribution names, the city gas distributors, is something that I've liked for a length of time. And I think the kind of volume growth that one really can expect from the city gas distributor players can be quite large. So the domestic gas pricing is in their favor with 2.48 in terms of pricing, and the input cost there itself goes very, very benign. Secondly, again, the kind of volumes that we're probably expecting, both in terms of CNG as well as the LNG part of the business, I think that should grow at a very humongous pace. And what it really does is that the gross margins for a lot of these players largely stay stabilized and then probably improve over the period of time. So from an earnings perspective, I think a lot has got played out in terms of the stock price movement. But if really one has a 3 to 5 year time horizon, my own sense is that city gas distributor players, something like IGL, is something I've been liking for a length of time. I hold that in my portfolio as well as a clear disclaimer. Is something I believe can really do well. And the other elements of the business, including GAIL or Petronet, I think a lot has happened even in the sense of repricing of a few pipelines. And again, in that respect itself, I think the volume growth is something that will do the talking. But again, there are some segmental business revenues coming in for GAIL. And Petronet, again, I think the earnings perspective should be good. So yes, I think selectively these names should do well. But everything has moved up, so I think one really needs to wait for declines to enter these stocks.
Okay, so wait for decline to enter these gas companies. That is the call we have. Joining us now is K. Ananta Rao of Kotosis Analysis and Advisors, and also Navneet Daga, Head of Derivatives at IIFL. Navneet, to begin with you, what's your call on Nifty right now? We saw some kind of consolidation, or there was a significant sell-off in last session. Do you think we are anywhere close to support? What does the F&O data really indicate?
Well, to our understanding, the support level will likely now come to somewhere near to 9930 levels. So the first level of defense would be there, because if you look out the entire move from 9700 to 10,200 levels, the 50% retracement comes somewhere near to 9930 levels. And it has been able to hold on to that level for last couple of times. So to my understanding, another 50-55 points more of volatility on the downside is possible during this expiry. And secondly, there has been a humongous amount of call unwinding, and as well as put unwinding, as well as call writing happened in the last 2 trading sessions. So that will make a case whereby the upside would be capped and the high side 10,100 levels would be very unlikely that we will be able to breach above that. So my only concern would be if there would be more of an put unwinding at 10,000 strike, there's a great chances that we might see a pressure accentuated somewhere near to 9,900 levels on the lower side. So what we believe is basically a sell and rise is the best strategy in this point of time. Whereby on the upside, if we keep a stop loss at somewhere near to 10,100 levels, would be a better strategy in this kind of market.
Anand, what are you watching out for this week, particularly because it's expiry week? Good morning.
Nothing. If you ask me this week, again, as you know, my friend here said very clearly, it's going to be a 4-day kind of an expiry which we have left, and it's been an option writer's market. will continue to be one. In fact, if someone will look at the options positions, Panics is spreading slowly around 95, 96, 97, 9800 kind of options, even not in this series, the next series, but this is uncalled for. Eventually, the option writers will take home all the premiums.
Okay, so you are not really worried about the India VIX crossing 12.5 again and closing at 12.8 or so in last session?
In fact, that gives me comfort. The more people are worried, the more you are building this wall of worry, the more there is.
So you mean this is not really a sign of growing volatility?
No. Every bull market, if you go through all the last 15, 20 years of data, there has been this kinds of dips. Take it as far as of history you can go. And if you see what is happening in India today is like first we had a resistance at 9100, a few months back. That got scaled up to 9600. Now it's like 10,000, 10,200. It will keep on scaling up. Till the time you have these walls of worry, I'm not worried.
Okay, so let's try and get some actionable ideas from our experts as well. Navneet, to you first. If I'm looking at like your stock strategies, and we'll come to the Bank Nifty later on, Navneet, but GAIL, you have a long call there.
Well, interestingly, this stock has started to show some signs of bottoming out pattern on the lower side, and what I've observed is it's a 400 strike price. There has been some amount of action which has happened, and it is corrected from 420 to almost 400 zone. And it's kind of a contra call in the market whereby I'm just trying to buy the stock which are just hanging on to the near to support zone. And to my understanding, it's a good support zone for somewhere near to 395 to 400 zone would be a good critical support zone for the stock. And looking for a bounce back trade in this, I'll keep a strict stop loss on the lower side of somewhere near to 388 to 385 levels and play for a bounce back towards 430 levels on the GAIL.
What about Ambuja, Navneet?
Interestingly, metals and cements are the one whereby which has taken a major of the brunt in this market and seen some incremental shorts coming into this in the system in this particular stocks. Cement is the one whereby we have seen a lot of incremental shorts coming in. Ambuja seems to be the good risk reward trade on the short side, and looking likely that it is created somewhere triple top bottom or triple top on the higher side of somewhere near to 280 levels. So I would not probably look to sell immediately at the first take on the market, but I look for any bounces somewhere near to 268 to 270 range is a good entry point on the short side, and play for a downside target of 250 and place a stop loss of somewhere near to 280 levels on the high side.
Anant, what's your top trade this morning?
We have two ideas which you have been recommending for the last couple of days. One of them is Gujarat State Fertilizer, which is looking good, can be accumulated at current odd levels, say up to 150 on the higher side and 120 odd on the lower side. Basic idea is this stock is coming out of a 34 month kind of a consolidation. A classic, and that's also a post breakout consolidation which is happening in the last 3-4 months. We believe this stock has substantial upside potential over the next 6 to 9 months. Can look up to an excess of 40% kind of a return over the 9-month period, which is a good alpha considering you are trading within the 1 year span. 115 is a good stop and can look at it. Another stock which comes a similar kind of a pattern, 25-30 month kind of a consolidation which is broken out, is Munjal Auto. 69.71 is what it's trading. I think it can be accumulated at this range. 56-57 should be a good stop. And then a similar, since these are all mid caps and 30-40% alpha in mid caps is over a period of 9 months is very much possible.
So Munjal Auto is
a buy.
It's a buy call, and you have a 6-month time frame.
More than 6 months.
More than
the
6
minimum
months.
is 6 months.
Okay.
But you will get a good 40% kind of an alpha, which is a minimum for any mid cap stock because there's a risk attached to it.
Okay, fair call. Thanks a lot, gentlemen, for those ideas as well. Stay on, lots more to talk about. But on to our Bloomberg Edge of the day. Jayesh Khilani has looked at the terminal, mined the terminal if you will, and got an interesting chart on Bharti Airtel. Jayesh, what does the Bloomberg terminal indicator tell us?
Morning, Niraj. So I looked at the trender indicator, which is a proprietary Bloomberg indicator, and it is suggesting a sell call on Bharti Airtel. That is on the weekly chart. Now, mind you, on the weekly chart, this does not happen too often. This is the first time in 2017 that the trender has given you a sell call. So let's have a look at what the actual trender does. So it's a proprietary Bloomberg indicator, like I was telling you. It uses the average true range concept as one of the key inputs for calculation. It also helps you to generate a buy or a sell signal, and also tells you where the stop loss should be. Simply follow the color to get the buy and sell. Green color indicates buy, red red is indicative of a sell signal. So let's have a look at the chart that we have on the screen. Bharti Airtel, for the first time, like I was telling you, has turned negative on the trender indicator in 2017. Now, you know, someone who would have bought early in December or in Jan would be sitting on gains of from about 300 to 450 odd. So this is the first weekly indicator that has turned negative on Bharti Airtel. So, you know, possibly some downside to come for Bharti.
What's the accuracy rate of this indicator for Bharti Airtel in particular, Jayesh?
So Niraj, I don't have the actual number that is there, but you know, look at the chart that you have. So every time the indicator has turned color, it has you know, followed it for quite some time. So in March, sometime it turned green, and thereon it has piled on gains from about 300 odd levels to 450. The same thing if you look behind one year back. In September it turned negative, and from there it has declined from about 400 odd levels to 300 odd levels. So you know, this is one of the indicators which really works well for Bharti Airtel. Sorry.
Okay, thanks a lot for that, Jayesh. So that's the trender indicator. Now, before we talk about the technicals of Bharti Airtel, let me just try and talk about Bharti for a bit. Mayuresh, to you first. There is probably fundamental reason as well why there could be downside for Bharti Airtel. This trender usually works beautifully, and I'll get the technical perspective, but fundamentally, Bharti Airtel, if you had it in your portfolio, would you liquidate the positions?
So as a disclaimer, I don't have it. I don't own it, first of all.
Yeah, which is I use the term if.
Secondly, I think if you look at the dynamics that the sector is going through, everybody talks about Jio and the dynamics that it causes on the data ARPUs and so on and so forth. But the underperformance is evident from the fact because the data ARPUs are not going to improve for a length of time. Are they sufficiently and adequately getting compensated with data volume growth? I think there needs to be far more volume growth happening specifically on the data front. If genuinely, I think you need to have positive ARPUs reflected from the data business per se. Secondly, I think with the IUC coming through, and again, I think it will be contested in higher courts. But again, it creates an overhang because the kind of EBIT or top line hit that both the existing incumbents can face can be quite substantial in a scenario where they're already leveraged. But the African business is probably trying to cope up in terms of what the Indian business, voice business has not been able to do and compensate for the same. But yes, I think the EBIT hit is a given if these things are implemented. So these overhangs is something that the markets do not like. I do not personally like it because I'm a strong believer of cash flows and free cash flows, and I don't think telecom companies throw out that cash flows to give investor comfort. The stock might have moved up and stabilized at a certain level. The churn ratio is far better than Idea. The stability in terms of subscriber base still remains strong for Bharti. But are these the only dynamics that should present a very strong conviction buy case? Not really at this point of time.
Navani, what's your call?
Looking at the charts, there's been a significant top pattern which has been visible on Bharti only at a level of somewhere into 420 odd zone. I don't believe that that one should be looking to sell that immediately at this current level. So if it started to break down below somewhere near to 393, 390 zone, it would be a conviction sell call. But it's not kind of in Bharti is not a kind of in stock whereby you chase the downside or upside as a momentum trade. So it would be rather than a support or resistance trade. So it's just started to break below 390. I would be more comfortable selling it. But I'll wait for if it's not, I'll wait for an upside somewhere near to 400, 402 zone to initiate a short whereby the risk rewards are quite favorable.
Okay. A quick perspective on the new kid on the block today as well. Mumbai-based construction service provider Capacite Infra Projects will list today. Healthy subscription. Nikki is here to tell us very quickly what should one expect. Nikki, good morning.
Hi Niraj. So I think it's an overwhelming response that we've got for this IPO. It was a price band between 245 to 250, and the offer size for this was 400 crore. The issue was open for subscription between September 13 to September 15. A good, as I just mentioned, it's an overwhelming response that we got for this IPO. Subscribed almost 186 times, and you see the QIB portion being subscribed by 134 times, HNI by 651 times, and retail by as much as 16 times. Now the company seems to have a sound financial history by its side. If you see the revenue, it's around 1,157 crore, profit around nearly 70 odd crore for FY17, EBITDA at 1,158 crore, my bad, sorry. EBITDA is at 158 crore, and the EBITDA margin for that matter, please excuse us, this is for 14%. If you see the shareholding pattern now, post-listing, promoters' shareholding stands at nearly 43.79%, whereas the public shareholding nearly stands at 56.21% for that matter. Now, valuation picture we are analyzing, we have given a scenario which is really on the bullish side of the game, because if you see the Dixon Technologies IPO, that got subscribed nearly 115 times, but saw a premium listing of around 51%. But this IPO has got subscribed as much as 186 times. So definitely a 60 to 80% premium is what we're looking at, given the base case scenario and how the markets are functioning. Also, the grey market premium for this company is at the issue price of 250 rupees is about 150 rupees. So considering that, we're deriving at a valuation black again to the valuation picture. If you see 400 and 450, the market capitalization with this stands at 2,715 crore and 3,775 crore. Between this valuation of 400 to 450, the price to book value for this stock stands at 3.8 times and 4.3 times respectively.
Okay, thanks a lot, Nikki, for all these details. So we'll keep an eye on this. But also Godrej Industries is a stock to watch out for, because now we have the opening date for Godrej Agrovet. If you have seen this chart over the last 1 year, or say year to date, the stock has moved up by 37% already.
That's the case with most of the FMCG players. If you look the broader picture, Lever has done well, Dabur has done well. Now, again, Nestle is looking good. So Godrej in the same pack will continue, and don't sell the pockets of strength. That's a request. Markets in general are having very small pockets of strength. Don't sell them.
Don't sell the pockets.
Don't sell them.
Okay, that's an interesting thought as well, and I think we'll ask Anand to elaborate in a bit. But the pre-open rate's about to start, and bring up the SGX Nifty, bring up the rest of the Asian markets as well, and just show you what's happening. Okay, the pre-open rates out there, all over the place, quite frankly. 1% higher for the Nifty right now. The Sensex are more muted, 1/3%. Suffice to say, these rates will settle in a bit, and then we'll revisit them as well at about 908. But just want to pull up some individual counters. So yeah, the mid-cap counters could be interesting today. Again, these might not be factual rates, but indicative rates. Oberoi, Shoppers Stop, maybe Glaxo, and a few others. A lot of mid-cap stocks in focus today. Interesting one. Shoppers Stop. Remember, the deal is done at a discount to the market price on Friday. But the nature of the investor coming in could well keep Shoppers Stop excited in the session today as well. And then a bunch of other names. From the large cap space, watch out for the IT names. Those saw some bit of buying coming in Friday's session in an otherwise very, very negative and a dull day. So interesting to see what happens to the likes of HCL Tech, predominantly HCL Tech, and to an extent Wipro. I think those two were the star performers in the IT space in Friday's session. And the currency will start trading any moments from now. We'll bring those rates up also for you. But I can't not talk about Shoppers Stop, Mayuresh. We may not see a 20% reaction. We may see that. Let's figure it out in the end of 8 minutes. But how excited do you think the investor community would be at Amazon checking into Shoppers Stop, so to say?
It looks interesting, because I think if you look at the entire retail space per se, I think there is a lot happening on the online model, and the typical brick and wall model system is probably showing weak signs, both in terms of the same sales store growth, and that's got reflected, as I said earlier, in very lumpy numbers getting reported by Shoppers Stop over the past few quarters. With a new investor coming through and the kind of pricing that it has come through, yes, it's going to be sentimentally positive for the stock. Whether they'll be able to maintain this momentum with the investor coming through in terms of their financial performance, I think the next 2 quarters, if they're able to show up, and again, I think let's keep in mind that there are festivities around, there would be a lot of discounting in terms of even the operations of stores that they carry on. So yes, I think if they're able to prove numbers and consistently improve upon, I think it's a candidate that can be looked at. But yes, today at least it's sentimentally positive. I think I'll be waiting more for numbers to come through.
But do you expect 20% circuit?
I don't think so. I don't think so. 20% should suffice. But yes, I think looking at the pedigree that has come through, it is a possibility. So you never can say in these markets like these when people are looking out for ideas. So there is a possibility, but I think as a long-term investor, I'll still be genuinely waiting out for numbers. But yes, sentimentally positive for this.
Sentimentally positive. Wait for the numbers to come in before you talk more. Before we get to Somit, just pull up the rupee performance as well. The currency markets have started today. Just bring up the dollar rupee equation for a moment before you move further. Not too much. 78. Yeah.
So even last session was quite muted, and probably there is not much happening in currency market now. At 65 odd levels, we saw strong support for rupee, and thereafter I think it's a very narrow range. Last session we saw a gain of 1 paisa, and today it's a difference of about just 3 paise on rupee. But rupee is right now looking at a strong support around 64.80, 64.90 odd levels. That is what the traders are really referring to this morning. But let's move on, and we should also look at what's happening to the other retail counters. Let's pull up Trent and also Future Retail and see what's happening there, because this is a positive news for the entire sector. So Trent is marginally up, just 2%, and Future Retail is actually down. So well, the action is only concentrated on one counter, as we see, is Shoppers Stop. Anand, do you like something in this sector? What would be your pick?
This is a sector which is quite volatile and doesn't suit our tastes. We typically like those stable movers which gain 5-7% a month and gradually over 6-9 months gives me. This is sometimes can give you heartaches. So not aggressive traders we are by nature, so we typically avoid this sector in general.
Well, so future group stocks have in fact moved quite a bit over last 6 months or so.
None of the charts have triggered into a buy on a medium to long term, so we've been avoiding it. Till the time they do that, we'll keep on having a look at it later.
There's interesting thoughts from K. Anant Rao this morning, quite frankly, and we'll talk to Navneet about some of his thoughts as well. But Sumit Sarkar is waiting by. It's about time that we bring in the big brokerage call of the day. Sumit, I think a couple of them, Godrej Consumer, there's a Credit Suisse note, and IIFL is a note on Cadila.
Yeah, so first we have a Credit Suisse on Godrej Consumers. Now they have upgraded the stock to outperform from neutral and have hiked the target price to 1100 from 1000. Now they are saying that the headwinds from the Indonesian business are far behind and the stock has already priced in this. Now they are expecting competitive intensity in Indonesia to ease down, and further there won't be any earnings downgrade coming from the Indonesian business. Now despite multiple headwinds in 2018, Godrej has maintained its innovation momentum by launching new products and by entering new categories. And on the back of this, they're expecting a strong bounce back coming in the second quarter of financial year 2018. Now, Credit Suisse is also saying that Godrej will regain its position as the fastest growing company in India on the back of best innovation pipeline. Now, second we have is IIFL on Cadila Healthcare. Now they have downgraded the stock to reduce from add and have cut the target price to 400 from 460. Now they are saying that the stock has already priced in the big launches of Ilda and Ascol. An Irish pharma firm has now recently launched the authorized generic version of Ilda, which would now put pricing pressure on Cadila Healthcare. And on the back of this, they have cut the FY18 and FY19 EPS estimates by 11% and 14%. Now they are saying that current valuations of Cadila Healthcare are already stretched and are at a premium to the larger cap peers. But however, for the next few quarters, they are expecting earnings to remain strong on the back of launches and GST related destocking.
Okay. Thanks, Amit, for this. And Cadila is actually, the report is a bit surprising. Mayuresh, if you look at it, Cadila and maybe DVs are a few companies that have managed to get some positive response from US FDA, and there's a sell call on Cadila.
I think, Pradeep, if you look at numbers and if you look at the kind of expectations over the next 2 years, a large part has probably got built in. Everybody keeps on talking about the kind of innovations and the NDA pipeline, but every pharma company probably has that. Now within the pharma space, are we really looking out for ideas which can have the worst hit actually taken on their numbers? This hit actually continuing for the next 2 to 3 quarters. But is there a recovery on the cards for some of the players? Too premature to call how the FDA might react over the next 2 to 3 quarters. But for the large cap names, I think the pipeline is very strong. The kind of expenditure they are doing specifically.
So what are you holding?
So Lupin is something that I've been holding. Again, it's obviously something that I like with a 2 to 3 year perspective. And again, the numbers will not be that great over the next 2-3 quarters, but I have the conviction that there will be a slow and gradual recovery in numbers, and the earnings also should improve over the next 7 to 8 quarters, I think.
For an investor, Mayuresh, I presume you are bullish on the cement pack. Yes. We have a cement discussion lined up later today, but what are the ideas that you like?
So the broad ideas are large cap, obviously everybody likes Ultratech as a street consensus, but within the mid cap space, Ramco and JK Cement is something that my belief is with the capacities going up specifically for Ramco, the kind of utilization levels that it is already operating out of the key regions of the east and Telangana obviously going in for big tenders. there can be substantial volume growth over the next few quarters, which will clearly get reflected in realizations. And same for JK, I think. They've got a small white cement division with realizations are far better than the grey cement realizations. If you look at the blended realizations, obviously they've shown an improving trend. Raw material hit has been there for the sector as a whole because the input cost inflation from pet coke and increase in diesel prices in the last 4 quarters did take a toll on the EBITDA. But largely again, I think as the pricing power comes back, as demand comes back, as utilization levels improve, the return on capital employed and this fixed asset sweating should ensure that the EBITDA per ton also improves over the next few quarters. So remain very, very bullish on cement as a back and Ramco and JK.
Okay, 908, the pre-open rates would have settled in. Let's bring up the Nifty and the Sensex and show you what's happening at the end of the pre-open session. Probably also bring up shoppers and see if it's got that big take. So as we suspected, it would be a muted start, a flat start, not really that 1% uptick that the Nifty was showing in the first 1 minute. So it'll probably have a start like this. Shopper stop at the end of the pre-open session, well, some would say surprise, some would say not so, but 19% higher. Oberoi would be the other interesting one to monitor. And then, of course, we'll monitor all the large cap names, the likes of HCL Tech, the likes of Yes Bank as well, which corrected in the session, in Friday's session quite strongly. All of these would be in focus. But I think the Bank Nifty is in focus as well today. And Navneet, the one strategy from your end that we haven't spoken about is the strategy on the Bank Nifty.
Well, if you look at this entire correction, the major culprits are the kind of a correction that we've seen in the private banks, and they have seen some kind of an incremental shorts into the system. And the kind of a chart breakdown that what we have seen from the likes of ICICI Bank or either Yes Bank or the yesterday's session, it makes me believe that now the upside which on the Bank Nifty would be capped and somewhere near 24,000, 24,650, where the monthly volume weighted averages comes for this month or entire futures contract. So to my understanding, the strategy would be basically a covered put strategy would work well in this kind of a market whereby you sell the futures somewhere near 24,500 levels, and at the same time you sell an out of money put options of 24,200 levels. The logic over here would be basically you for the next 3 to 4 trading sessions you try to eat up the premium on OTM options, which is at 24,200 levels, and simultaneously upside looking very limited on the higher side of 24,600. So I'll keep a stop loss of 24,650 where the monthly averages comes and play for the target of 24,200 for this week itself for the Bank Nifty.
Anand, how are you playing the Bank Nifty if at all you're playing it this week?
Just along the same lines as what Mr. Daga said, we'll be preferring to use the spike in volatility and right puts only for this expiry.
Okay, that's the strategy. One stock that should come on your screen is CCD. If you look at Coffee Day Enterprises, this stock has opened weak, down by roughly 5% in today's trade, and that is following the CCD founder admitting a 650 crore rupees undisclosed income. And this is the result as we see it now, 220 odd levels at Coffee Day Enterprises.
Actually, I wonder if Sikal Logistics too is reacting, Pradeep, because that's the other interesting group company as well. Let's just try and see if Sikal Logistics has reacted a bit as well or no. No, not too much. So, yeah.
So there's an interesting portfolio that the promoter actually holds, across sectors. Any thoughts, Mayuresh?
No thoughts. I'm not getting near them.
You don't track CCD?
No.
Well, Anit, you have seen the chart? No. We haven't talked about this stock for a while now.
Yeah, but with reason. I mean, it's not really creating that kind of wealth that it probably promised. It was a fancied IPO. I don't quite remember the response to the IPO, to be honest, but yeah, I think post listing it's really not set the stage on fire, quite frankly. And probably even Tata Global Beverages fell in that same pocket, even though they had Starbucks. It's just that recently, the last 5 odd 6 odd months post Chandra coming in and doing all that he's doing with the Tata Group, that Tata Global Beverages has managed to kind of find some favor back with investors. Otherwise, CCD has been a dud of a stock. I mean, I don't quite frankly remember anybody talking about CCD as an investment idea in a really long time. So, yeah, not without reason.
So, Tata Global has incorporated a subsidiary in Russia, Coffee Trade LLC. Any thoughts on Tata Global or Tata Coffee?
So, Tata Global is something that I own in my funds. And yes, it's been a drag, as Niraj was pointing out. We haven't really done something in terms of substantial except for the past few sessions. At the end of the day, it's a commoditized business. So commodity businesses will have a fair share of their earnings growth, and you can't expect exponential earnings growth to happen on that front. But the entire restructuring exercise, the Starbucks venture, the foraying of new products into the US markets, I think the earnings momentum might be a very stable one for Tata Global. So I'm not expecting earnings to compound in a substantial way. It's a slow and a steady earnings momentum for the stocks. I think I'm pretty comfortable holding it for the long term.
Wow. Okay. 9:12. Let's get you all that you need to know with regards to the session today. The top 5 or 6 names that should be on top of your minds. Let's just get those going. The portfolio rejig and a lot of other things we'll talk about, yes, but I think the top 6 stocks on the minds of investors is something that should come about. So Shoppers Stop is the first one. Amazon has bought 5% stake in Shoppers Stop at a 2% discount to CMP. The stock will start off on a high today.
And the GlaxoSmithKline Pharma board has approved sale of 60-acre land in Thane to Oberoi Realty for 555 crore rupees. JP Morgan believes deal is positive for Oberoi Realty.
Capacite Infra Projects, the IPO with blockbuster subscription list today. Meanwhile, SBI Life sees poor subscription in HNI and retail segments not fully subscribed.
Jain Irrigation in focus as the company will be meeting Reliance Treasury, Alchemy and Edelweiss today.
FNOQs indicate aggressive call writing at 10,000 to 10,200 to limit upside in the near term. VIX surge is 10%.
Credit Suisse upgrades Godrej Consumer and hikes target to 1100, while IIFL remains bearish on Cadila Health with target price cut to 400 rupees.
Wow, this could be interesting though. Jain Irrigation, they're meeting a bunch of investors today. Just before we get set for market open, Niraj Joshi, a quick one. Jain Irrigation, very quickly.
Looks interesting, but not at this point of time.
Looks interesting, but not at this point of time. So are you waiting for a price or are you waiting for some event to happen, Mayuresh?
I think the event news is already there in the market, but I think it's more a price correction that I'm looking at.
Okay, more a price correction that Mayuresh is looking at. Fair call. A minute to go before open. Let's get in the top call from our experts, maybe for the day, maybe for the short term. Navneet, if you had to bet on one stock, one index for the day today.
Well, if I have to bet on, I would be basically shorting the volatility since a spike is there. So it would be basically a call on either the bank Nifty that I shared. Apart from that, if somebody is aggressive traders would write a straddle on Nifty. Selling at 10,000 call and put if I getting a premium of around 125, 130 points. It would be a fair bit of trading. The next 4 trading sessions, it would be a good amount of decent amount of cushion on the higher side of 10,100 and 9,900 on the lower side. So selling a volatility would be a good call for this market for the next 3 to 4 trading sessions.
Okay, I'm going to just take your call in a moment from now, but the markets have opened. Let's get in what the key indices are doing. So flattish start for the Nifty, Sensex and the Nifty Bank as well. On expected lines, really nothing untoward expected otherwise either, but about 20 odd points down for the Nifty. So 9942 for the key benchmark index. The Nifty Bank about a third of 1% lower at 24292, down about 83 points. Now down about 0.5% for the Nifty Bank. The broader markets not so much, just about 0.1% or thereabouts. So no big movement in the broader markets, but the Nifty Bank it is, which is actually correcting thick and fast in the session today. I'll bring up some individual names. Well, let's start off with the large caps. Yes Bank, Reliance Industries, both of these saw some correction. ICICI Bank, I think, saw some correction in Friday's session. Let's see what these are doing in the session today. So down about 0.5% for Reliance. ICICI Bank marginally higher. Yes Bank was down about 4.5% in Friday's trade. Let's see how it is reacting today. Another 0.5% down. HCL Technologies was up in Friday's session. Let's see what it is doing in the session today. Should come up on your screen. About a third of 1% in the red. So no great takeaways really. Not too many big gainers or losers, I would suspect, at least on the large cap names. Now let's bring up the mid caps and see what they are doing in the session today. I'll start off with the usual suspects. Pradeep will probably have more details, but Shoppers Stop should come up. Oberoi Realty, fine. Let's start with that. 6% higher. Now Shoppers Stop, and let's see if that is reacting. 15% higher. So while Mayuresh was right, it's not a circuit, but it's a big bang reaction, quite frankly. 15% is nothing to scoff at. The deal was done at a discount, remember, but Amazon coming in is, I think, clicking in these gains. Godrej Industries, no, not so much. Cafe Coffee Day should come up on your screen. Let's see if there is a further reaction to the 4.5% downtick that we saw in the pre-open rates. And Cafe Coffee Day will come up on your screen as well. That one would probably be starting off on a somber note. A question mark is whether it extends its losses or whether it continues to stay at these levels. For now, it's extended the losses down about 7% in the session. Pradeep, what else?
Real estate is one sector which is clearly in focus, not only Oberoi Realty, but some other stocks also will keep an eye on. The index is up around 1%. And if you look at FMCG, that's another sector where some buying has emerged after a week opening. Oberoi Realty is now up 7%. Keep an eye on that. Adani Transmission is another stock which is up by around 4%. Media stocks have been buzzing, and TV Today Network has opened up by around 3% today. Also, we have some mid-cap cement stocks like Prism Cement, fertilizer play, there is Deepak Fertilizer, which has gained around 2%. Godrej Consumer is up around 2%. So FMCG is the other sector I talked about, and that is actually in focus. There is some buying emerging. You also have some more names like DB Realty in real estate, which is trading up by around 2% or so. Ahluwalia Contract, this is another stock which is buzzing with good volumes in today's trade. These are some of the mid-cap names right now, although if you look at the broader indices, they are also trading weak. Coffee Day is now down by around 6%. Bombay Dyeing is also correcting now, is down by around 5%. Yeah, Muthoot Finance, and you also have Himachal Futuristics. Okay, Himachal continues to correct, but not on lower circuit today. So that's a respite maybe. MRPL is trading weak, and RBL has also opened weak by around 2.5 to 3%. Bajaj Finserv also. So financials continue to correct in today's trade. Indian Bank is yet another stock. Also, we have Manappuram Finance, which has opened weak. So these are some of these stocks. Clearly, the financial services has been out of favor with traders since last week, and that trade kind of continues. DCB Bank is yet another stock to watch out for in this space. So financials, NBFCs, mid-cap banks, well, this is clearly where we have a lot of selling this morning.
Navneet, your opening thoughts, Bank Nifty in particular.
So as we were looking at somewhere near to 24,200 levels on the lower side. So if somebody who is not on the sell side taking a call at this levels would look for a bounce on the during the day to sell, but the logic is right basically that if we're getting any bounce somewhere near to 24,400 levels as well, one should be looking to sell the Bank Nifty and simultaneously protecting themselves by selling an OTM put options, which are a bit expensive in this market. So that trade will work on, but I'm looking likely that somewhere 24,200 is a one level whereby it's likely to find a lot of support for the during the day.
Okay, let's stick to today's chart on the Bank Nifty, and that one is down about well, as we said, 0.75%. Anand, your opening thoughts on how the markets have started off?
Markets actually have started in line with what general expectation was. It will be soft, and it's soft, not a problem. Only thing is that, yes, this thing should get over in the next couple of days. As we move toward expiry, there would be a bit of jitters. But I think once the expiry is over, we'll be back to the track. So I don't see too much going into the next expiry or any poison which will be flowing to the next expiry. That's not is going to happen.
Where do you really see the expiry? You have any levels in Nifty and Bank?
I think the same levels as what we are, plus minus 0.6% is fine enough. Not much of a panic. At the end of the day, in the last 4 days, it's an option writers market and they will have all the fun.
So you think 9,900 will hold?
Yeah, at lower levels, there will be a certain good buying in the basket kind of a Nifty, and people, it'll come. We've seen this time and again, Pradeep.
Well,
so it's last 4 day fun.
So that would be a bold call at this level. We are just 20 points away, and Anand really feels that 9,900 will be protected. It's true that we have seen it in earlier expiries as well.
Yeah, Pradeep, you'll be happy to know that some of the retail stocks are now finally starting to react. So I think trend is up about a couple of percentage points. That's starting to do slightly better. And I think Mayuresh has shown his hand already, but he's saying that he's not going out and looking at any of the retail names, be it Future Consumer, Trend. Well, Future Consumer not technically, but yeah, Future Retail or a Trend, or some of the others. FCEL, by the way, was trading at 65.66, is now down close to 59. So that's about a 10% correction that we've seen in some of the high-flying names. Bombay Dyeing is the other one. Mayuresh, any idea? I'm stuck on this one. I'm not getting a response from people. Bombay Dyeing, what really has happened here?
Not too sure, Niraj. So again, I think if you're talking about land bank as a story, I think there are multiple stories in the market which can move on this land bank scenario. But frankly, I think it has beaten me to the wits as well. So no, frankly, nothing at this point of time.
Okay. Another sector that we have been talking about, the entire financial space has opened weak this morning. Anything you hold in NBFCs, private sector banks, and what's your strategy really?
So the long-term prospects, Pradeep, look very, very interesting for this space as a whole. So within the private space, I think the corporate banks is something that I'm very, very gung-ho about over the next 2 to 3 years. I think the worst in terms of an asset quality hit has already been recognized on the balance sheet. The next 2-3 quarters might also have some recognition actually come through in terms of the drill down of the watch list that remains. So I think ICICI Bank remains one of my conviction buys with a 2-year, 3-year perspective. Within the NBFC basket itself, and if I have to categorize that in housing finance companies, DFHL is something that I'm owning from a long time. I intend to hold that because the kind of leverage that the company can do with 2,000 crores coming in through the balance sheet strengthens the capital adequacy and the lending book, and that itself will shore up their earnings perspective. The rural financing companies also seem to be a very, very interesting bet because with elections coming around 1.5 years down the line, employment being still a big issue in terms of the political agenda, I think the Exchequer is going to present something which can be far more better in terms of rural SOPs in the budget to come, and that can have a huge say in terms of how these rural financing companies might behave. So selectively, I think in pockets like microfinance.
But you have been staying away from the likes of Bajaj Finance, Edelweiss, Capital First, the ranked outperformers, so to say.
So they have outperformed. If you look at the price to book multiples, yes, they are on the higher side, whether they can sustain these multiples. I think the growth has been humongous for companies like Bajaj Finance, Bajaj Finserv, and I'm pretty sure they'll be able to do that because the pedigree of management that they have, the kind of rural reach that we've got, and again, I think they need to spread their wings across. You visit any store, I think, even at this point of time, and specifically in urban areas, I think you see Bajaj Finance and there's a new kid on the block, Capital First, who's giving the zero finance schemes. So there's a lot more happening out there. So I think they are qualitative stocks, so they can be held on. But from a bottom-up perspective, I think valuations also are equally important at this point.
Well, it would be interesting though, since you mentioned visit any store, I want to visit a store once again. You know, I can't get over Shoppers Stop, quite frankly, guys. 17% higher, and for viewers who are tuning in right now and wondering what this is about, 16% higher. Well, Amazon, the investment arm from Amazon has invested, has taken a 5% stake in Shoppers Stop. For a sum of about 180 odd crore rupees. Now, this is not about the valuations at which the deal has been done. It is not really about how soon can things turn around for Shoppers Stop as a result of this. Remember, Shoppers Stop has 1% online sales, 1%. Everything else is brick and mortar. The question is that they've realized, and they've said in the previous interviews, that they want to go in the omni-channel strategy and start doing online sales in a big way. Does the investment by Amazon and subsequent integration of sorts on the Amazon platform really help Shoppers Stop move quickly towards that 10% mark or higher than that? And does that really shore up the operational picture as well as the bottom line picture for Shoppers Stop? That's really the key question to ask out here. And today's reaction is, as I think Mayuresh summed it up correctly, today's reaction is a sentimental reaction. I think people, maybe the management can throw more light on 2 or 3 key questions. One, whether this leads to a faster EBITDA margin improvement. 2, whether this leads to the bottom line moving back into the black in FY18, because the last couple of years they've incurred losses. Last quarter as well, then losses narrowed, but they were into losses. So those are the 2 or 3 things that need to be answered. And at some point of time in the day, I think 10:30 is when the management is speaking to us, and that's when we'll be asking all these questions to Shoppers Stop. So that is something that people need to watch out for. Today's reaction could well be a sentimental reaction. Anand, I know you don't track retail per se. My question to you would be, aside of the 2 recommendations that you've given, which are largely on the mid-cap space, is there anything on the consumption side in the slightly large cap pocket that you guys like, either from a trade or an investment perspective?
Consumption side, FMCG looks a good bet.
It looks a good bet to you?
ITC at 268, 270, yes. It's a good correction. If you remember, 1.5, 2 years ago, it was trading around 214. But the pre-bonus moved up to around 330, 340. It's a healthy correction. Buy it. And then you have Bajaj Auto. Just a week ago, made a new 52-week high. Good story, building up pockets of strength.
Okay. Before I get to Navneet, Mayuresh, Bajaj Auto. and again, I bring up this whole conversation. You mentioned Hero MotoCorp. We spoke to Guleria of Honda as well. The season seems to have started off on a good note. What about Bajaj Auto? That's a slightly tricky one to really decipher as to what it does. What are your thoughts?
I understand where it's coming from because I think the overseas business is something which has been a drag for Bajaj Auto. And again, I think if you look at the patterns within the auto industry itself, I think Bajaj is more urban-centric, Hero Moto becomes more rural-centric. So I think where the growth is going to come from, it's going to be more rural and semi-rural and semi-urban. Again, I think the tie-ups that Bajaj has done, the expected tie-ups that they're expected to do going forward, whether that has a huge say in terms of their product profile and whether that actually helps them shore up their earnings, I think it's still going to be a little sticky compared to the other two-wheeler players. So I think I'll be better off with the Hero MotoCorp at least at this point of time.
Navneet, before we thank you, any two-wheeler stocks that are on your radar from a trade perspective?
Well, in fact, Bajaj Auto, it has seen a multiple tops at 3100 levels. It was just about to cross, and we have seen the market correction, and it was pulled back. So certainly, it's showing that the strength is there in this stock, and the chances that once it started to break above 3100 levels, it might start to outperform the overall basket of the two-wheeler space. Or wait for a moment and look for a closing above 3100 level, which is not far away. It's almost 2.5–3% away from the current market price. So either it corrects down somewhere near 2850, or either it's break about 3100. It would be a good bet to trade on. So at this point of time, it's just in the void.
Okay. Two home finance stocks should actually come up on your screen. Look at Repco Home Finance. The stock is quoting weak, roughly 6%, although I think it has recovered a bit from the lows. If you see it, it is now trying to recover, although the stock has fallen quite a bit. And the other stock here would be in the home finance segment that you look at on the positive side is actually Reliance Home. If you look at Reliance Home today, after an unimpressive listing in last session, the stock has actually moved up by roughly 5%. So it's on the upper circuit right now. Any views, Mayuresh, on this one?
Again, if you look at the assets under management for the company and you look at the valuations that it has derived post-listing, is there a substantial amount of growth that it can sustain over the next 2 to 3 years in a sector which is having hyper competition? The PSU banks are not there at this point of time aggressively trying to sell home finance, but the other private players are. The cost of borrowing has come down generally because a lot of NCD borrowings has happened for the housing finance players. So largely, I think one really needs to be a little bit more selective within the space per se. As I said, I think I'm very, very comfortable in holding Divan Housing. I think I still remain very, very optimistic on that stock.
Okay, by the way, just a couple of pointers that are coming in from viewers on social media as well. And guys, we can answer some of the questions. Maybe we can't answer some of those or ask our experts. But the happy 1992, thank you so much for tuning in. I'm presuming you're liking because you're thanking our great lineup of shows and experts as well, which is pretty good. Sandy, will Kim attack the US and will stocks fall this week? Well, I think that's the question that's best answered by Kim. I don't think anybody on planet Earth, including Donald Trump, has an answer to that. But thanks for tuning in any which ways. And Nitila Bhanuji, what is today's downfall? I think that's an interesting question. I don't know what's the quantum of downfall that we'll have if we have in the first place. But Anand, one quick question really. If the index were to correct today, is there a short-term trade on the downside? Maybe that's the question that Nitila Bhanuji wants to ask.
No.
Okay. You don't believe there's downside to this index?
There is downside, possibly, but there is no short-term trade. No,
okay.
For that you need to sit in front of the screen and do it. It's like that,
okay.
Very simple.
Okay, fair call. So, well, that's the advice, Nitala, if you wanted really. So, those are a few questions that we got. And Sunil Chal, of course, asked about whether Tata Global Beverages is a good long-term investment for 10, 20 years. I think Mayuresh has probably a 5-year view. I don't know if he has a 20-year view. Mayuresh, do you? Very quickly.
Not a 20. I think you should revisit your portfolio every 2 to 3 years. So 20 becomes a really long time. So yes. But it's a story that I said I don't mind holding for the next 2 to 3 years.
Fair call. Okay, there is another listing today. There is a TI Financial which will list. It's the ex-Tube Investments arm. And Darshan is here to take us through the details. Darshan, what does TI Financial do or what does it house?
Niraj, so basically the company that was there initially was called Tube Investment of India. Now what had happened is that the management decided to demerge it into a manufacturing unit and a company separately for TI Financial. So what will list today will be TI Financial. So it's Tube Investments, the name got changed into TI Financial, which is the majority of the financial is the majority business. So TI Financial will get listed today. Tube Investment, which will be the manufacturing arm, will get listed at a later date. So the last price that we saw was 794. You can anticipate that the street is anticipating a listing of TI Financial anywhere between 450 to 500 rupees a share. That will be the pre-open rates will come in at 9:45, and 10 o'clock TI Financial will list. Now, what does this house? This houses the financial business of the company. They have a 46.2% stake in Cholamandalam Investment and Finance Company, which itself is a listed entity. It has 60% stake in Cholamandalam MS General Insurance, and it owns a 49.5% stake in Cholamandalam MS Risk Services Limited. Now, what's the rationale for the demerger? And the management has said that they want the businesses to be separate so that in each and every business can focus on the line of the business. So the financial company can focus on the financials, and the manufacturing business can focus on the manufacturing. They are saying that they believe that this will create shareholder value. They believe that the shareholders then will get to decide which is the better pick for them instead of giving them the whole company. And they believe that there could be a possible lower holding company discount because Tube Investments has a stake in Cholamandalam Finance. Now, how will this work? Initially, the promoters owned 49% stake and the public owned 51% stake in Tube Investments, which in turn had TI Finance, the financial services and the manufacturing business. Now, what will happen is both will get demerged. It's a mirror shareholding reflection. So, the promoters will own 49% in Tube Investments, and promoter will also own 49% in the manufacturing business. So, that's the mirror shareholding that is happening. So basically, as far as value is concerned, you have to watch out for TI Financial, which will be listed. Tube Investment, the manufacturing company, which houses the engineering, cycles, the metal, the other investments will be housed, will be actually getting listed at a later date. So we'll come to know at 9:45 what kind of pre-open rates TI Financial will come on today.
So there are two things that will be in focus. Darshan, thanks a lot for throwing light on TI. I don't think too many people lean light on Capacite. That one, in all probably, will have a very, very strong listing. But on that note, K. Anant Rao, thank you so much for joining us and giving us a sense of the technicals on our opening week. Pleasure having you, Marish. Thanks for joining in so much, as well and giving us your thoughts. Much appreciated. Okay, moving on to another discussion. Cement and those prices in India have seen some softening, we presume, during the current quarter. Owing to the GST transition. I think some dealers mentioned about there being about a 15 to a 20 rupees cut as well. But let's, without speculating, let's discuss the pricing trend in the cement space and how is demand likely to take up because of a variety of factors that are coming up. Jamshed Nawal Cooper, Managing Director and CEO of Heidelberg, joins us right now on the show. Mr. Cooper, thanks so much for joining in on BloombergQuint. Appreciate you taking the time out. I want to start off with one tweet that came in from Vinayak Chatterjee of feedback, and he mentioned that road construction has moved up from 7 kilometers a day to 22 or 23 and likely to go up further as well. One would presume that and certain infra revival would naturally lead to a higher demand for cement. Is it happening? Will it happen post monsoon season getting over, or is it too difficult to say that right now?
Okay, so today when we are talking about road construction, it consumes a lot of cement. I agree with it, but as of now we are not seeing the demand which is coming in as the way it is. If it was a 21 kilometer, then the cement demand should have shot up significantly. I think it's a mobilization stage where the contractors are mobilizing their equipment and trying to garner their resources so that they can start the construction post monsoons. As of now, there will be another problem which they could also face, would be availability of building materials. So that is one thing which the government has to work upon because there are many places there won't be availability of sand. So those are the things which they will have to grapple with. As of now, we don't see the demand on the table.
Mr. Cooper, if you could give us an idea how prices have moved so far in September?
September, I would say if I take a central India view or a North India view, it is more or less, North India is a little bit depressed. If I say a central India, it is more or less flattish, minor reduction. East, a little bit of improvement was there, but after the Bihar floods, it tanked a little. South, it has been a little softer, I would say.
So, if I'm getting the sense correctly, Mr. Cooper, you saying that demand is not on the table. South has been soft and the other regions haven't really set the stage on fire. it's difficult to envisage a scenario wherein pricing could move up substantially over the course of the next 3 months, at least as things stand right now.
See what happens, basically this is the monsoon effect. Many places the monsoon was delayed. So we should not attribute that, the total demand is vanished of the market. But yes, in some parts of the country where the demand is low is also because of availability of sand and building materials. So I think once this monsoon period, which is now about to end, and there was a Sharad period now after this period when the Navratra start, new construction starts in, triggers in, I think the demand should start coming back from October onwards. And I think by November it should be better off.
How is channel really coping up with GST implementation?
Yes, initially we saw a lot of setback in the business. For quite some time, for days together, we did not see the demand coming in because the dealers were a little worried about how they will manage their businesses. But I think the cement dealers in a very short period, they were able to understand now that there is no way out. So in the retail segment, we are still finding that at a retailer's level, that is the sub-dealer level, there is still resistance. But I think those people who are in business, they have no options. So one by one, they will keep coming in. We saw some improvements happening in the month of September. In August, there was a little lackluster there, but now coming forward, I think October and November should be better. I think people are getting used to it. It's a question of how they manage their accounts, how they manage. Many people who did not have registrations have got registered. They have hired chartered accountants to do the business. It is a little cumbersome, especially the debit notes, the credit notes for them is going to be a little tough because industry practices are very varied right from north to south. If you go, the practices vary in a very, very major way. So the dealers will have to learn to cope up, and the companies probably will have to change their methods of working also, I suppose.
Mr. Cooper, the higher costs to cement counters as a result of less availability of sand and a few other factors, will that result in margins getting squeezed, coupled with the fact that pricing is not looking as robust? Or would you have saved quite a bit because of freight cost savings? Because across the board, when we read reports, we hear this piece of news that freight rates have come off quite rapidly and transport is a lot quicker post GST than what it used to be ahead of June.
I don't think that is the freight costs will get impacted because of GST. I would say that this is probably a myth. In my view, the transportation is taking the same amount of time which it used to take. Maybe about a few hours you can reduce here and there. It's because of the toll tax avoidance and all those things. But I don't think you are going to see a major reduction in freights going forward.
Wow, okay, that's a bit of a revelation because reports, at least the sell-side reports, Mr. Cooper, that are coming in are saying that freight rates have come off, availability is much higher. You are negating that. You're saying that is not the case. For Heidelberg at least, or maybe for the industry at large, freight rates haven't come off.
No, it has not come off, and it won't come down also because you see, when the demand is low, the truck availability will go up because those trucks which are plying only for cement, that truck availability is there because the demand itself is depressed. Once the demand comes in, the same amount of trucks will get pressed into service. So I don't think it's a very short-term way of looking at it. In the long run, you are having the same amount of trucks, same amount of road transportation to take place. You have the same railway yards, 50% close to is moving by rail, 50% by road. I think this will stabilize again, come back to its normal curve in the month of October, November.
Okay. So other than infra, housing is the other key driver for your sector really. Mr. Cooper, what kind of indications have you got so far from the big buyers, big developers? Are they ready for resuming construction activity post-monsoon? What kind of orders or off-take do you really expect?
See, there are, if you look at it, the housing availability in terms of surplus still exists in the market, especially the metros, the surplus is there. So metros will continue to see pressure. But in tier 2 and tier 3 cities, I think there is a significant amount of demand which will come from a smaller housing. In terms of the Pradhan Mantri, Yojana of this Awas Vikas and things which are moving in, I think we see a lot of activity taking place there at state level. So those states which are moving faster on this, they will see a better demand for cement from especially the government sector also in terms of housing, the small low cost housing. But if I look at the tier 1 cities, they will continue to remain under pressure because I think the availability of unsold stock is significant there.
Your PMAY, have you really seen implementation so far, or it's all at the drawing board?
It is now, at least there are phone calls coming from contractors, phone call coming from the collectors, asking for cement, asking us to quote a better rate for long-term contracts. So these things from the local ministers are coming, phones are coming in that, they want to tie up for cement. So there is some activity which was not seen about 9 months back. At least we could see something in the month of July, August. People started talking to us. So I think it's now time is coming up for some demand to come in.
Do you expect real orders flowing in?
I think the real orders will start somewhere around December, end December to onwards. I think January, let us say a little conservative, it should start from January onwards. I think it should be better.
Okay, my final question to you, Mr. Cooper. For Heidelberg individually, how do you expect FY18 as a year to shape up? Both, one on the kind of growth that you could see, price, volumes, revenue, and two, whether operationally it will be a stable year or could we see some pressure there?
On the cost side, we have managed our costs. Heidelberg has managed its costs very well. So I think we are only just concerned about the market side, which is always a big dilemma. The all India market is growing around 5%. I think we should be better than that, or at least we match that. At least we not be lower than the market rate, whatever trend it is. So to that extent, I can say that we will try to at least be better than the industry trend.
Okay, Mr. Cooper, we wish you all the best for that and more. Thanks for taking the time out and joining us today. So that's the cement discussion. Lots of reports about how pricing has come under pressure, how the cement offtake hasn't been that strong and demand-supply mismatch. I think a couple of things that got clarified out here, namely one, that freight rates haven't come off for cement at least, and by that I would probably extend to the other commodities as well. And they hope that margins will be managed very well in the current quarter. What has not been managed too well though, or what has actually turned out to be a bit of a disappointment, is the response to IPOs of marquee companies including SBI Life and ICICI Lombard, which have quite frankly seen a muted response. Yatin is here with a bit of an analysis. Yatin, good morning.
Good morning, Niraj. Of course, the response has been muted, especially in the retail and the HNI category. Now, if you look at both the IPOs, the insurance IPOs, which is ICICI Lombard and SBI Life, and the kind of excitement which was there during the IPO Open did not translate into subscription numbers. And if you look at ICICI Lombard, the QIP portion got subscribed by a little over 8 times, but look at the HNI portion and the retail portion barely managed to get subscribed, fully. Overall issue was subscribed by nearly 3 times as far as ICICI Lombard is concerned. SBI Life, the QIP portion was subscribed by nearly 12.5 times. However, the HNI and the retail category just managed to get, oversubscribed. The retail portion, of course, was supported by the employee quota as well. Overall issue got subscribed by nearly 3.5 times. But the key factor, according to market participants, is the weak market conditions, because of which there was muted response, and more importantly, the kind of valuations, both of these companies wanted. That was probably something wherein the HNI community was slightly cautious, and probably that translated into weak subscription numbers on an overall basis. Also, if you look at the premium in the grey market, which is basically a benchmark as to how the subscription will pan out, that has turned into discount for both SBI Life and ICICI Lombard. So clearly, given the fact that the listing expectation is also muted, the overall subscription for both of these was quite weak. Of course, we'll have to wait and watch as to how both of these IPOs list, given the fact that there was strong institutional appetite as far as anchor book and the QIP portion is concerned. But however, we saw a very weak response in the retail and the HNI segment.
We'll talk about that and more with Dilip Bhatt. Yatin, thanks a lot for that. We'll talk about that and more with Dilip Bhatt of Prabhudas Leeladhar. Dilip, thanks so much for taking the time out and joining us on the market correction as well. In fact, Dilip, just before I come to you, keep in mind, viewers, thanks for tuning in. And I'm speaking about this right now because there are a bunch of questions that have come in on our social media platforms. So Jocelyn Jose, for example, is asking about what are the chances for the Nifty correcting 10% from recent highs. Now, guys, thanks for tuning in. And let's start off with that question with you, Dilip. There's a bit of a fall in the markets today, some pressure in Friday's session as well. Is there a chance for a 10% fall, Dilip?
Hello?
Yeah, Dilip, can you hear me?
Yeah, very clear.
Yeah, Dilip, thanks. This is Niraj here. Is there a chance for a 10% fall?
Sure. Niraj, you know what? Markets have really shown a fair bit of resilience all throughout. And we all know that the domestic inflow has been pretty strong, and that is not allowing for any serious correction. And it is very difficult to imagine otherwise, even now, that it's going to break that pattern. So I would still think that markets will correct, but 10%, in my opinion, appears a bit too steep. So if you're talking about a level of, say, less than 9,000 on Nifty, I think that appears a little bit too much. I would still give another 200, 250 points on Nifty from the current level. That looks very much possible, but a 10% is not what I'm factoring in. I think the markets will continue to be range bound. Without any doubt, the markets are very overvalued at the moment because there is not enough tailwind in terms of the economic growth or the corporate earnings really happening the way we would have all desired.
Okay. Dilip, actually the question, as I can understand, if your viewer is asking you whether markets can fall 10%, he must be willing to invest, but the real issue is, should you put your 100% capital into the market right away or wait for a correction? So what would be your advice from that angle?
Right. So what I said is that I think 200, 250 points of correction in the market looks very much possible. So I would really like to recommend that one should spread out their buying gradually. And in any case, we always feel that the way the markets are, whether it was at 10,200 or even at now, it's never advisable to put the entire money at one go. One should gradually keep on investing in a kind of SIP manner. So whether you're doing it with mutual funds or whether you're doing it on your own, you must keep on gradually buying the stock, not really put the entire thing at one go. But surely this market does remain buy on this market and will continue to be for some time because this equity as a class of assets still looks by far the best possible option from an investor's perspective.
Banks are under pressure, Dilip, the last few days, more than what the other sectors are. The response to some insurance IPOs hasn't been that great either. What's your calling on the BFSI space?
Well, I think in the banking space, we continue to see a very polarized kind of approach. The private sector banks continue to be very much in demand, and though they are not really cheap, they continue to attract investors. And then we have seen that over euphoric buying in some of the NBFCs and the microfinance companies. I think on an overall basis, I would still say that the banking sector possibly looks good on a longer term basis. I think we'll gradually see the improvement in the credit growth. We'll gradually see the improvement even in NIM and the credit costs coming down also for some of the for the banking sector as such. But I wouldn't be too negative on this particular sector. I think, yes, if the index, if the Nifty has to fall and the banking sector being almost 27, 28% of its component, I think it is but natural to expect that banking sector has taken it on the chin. But having said that, I think the long-term prospect still continues to be very good for this particular sector.
Okay, Dilip, thanks a lot for taking time out for us. Also joining us on the phone line is Pankaj Murarka, the head of equity at Axis Mutual Fund. Pankaj, good morning. How do you see this correction in markets right now, and what's your strategy?
Just one correction. I don't work with Axis anymore. I left Axis late last year. Just coming, I run my own investment arm, Renaissance Investment Managers, just to come back to market.
Corrected on that.
I think, this is nothing but a normal profit booking that we're seeing in the markets. Markets have been on a strong uptick, and India probably, YTD has been one of the best performing markets globally. And if you look over the last 1 year, markets are up something like 25%. So we've had a very steep rise in the markets, and what we're witnessing is nothing but a round of profit taking, which is healthy for the long-term health of the market.
Pankaj, while that may well be the case, when does it start looking healthier? Would it be 5% lower? Would it be 10% lower? Or you're not looking at index levels individually?
Well, the markets have been up something like 25% over the last 1 year. So 5 or 10% correction cannot be ruled out. But I think that will be in the better health of the market from a medium term to longer term perspective. So while it's very difficult to say precisely as to how much markets will correct over the next few weeks, but what's more important is, I think for investors who have a 2 to 3 year time horizon, that should be a good opportunity to invest into the markets. But having said that, meaning a 5 or 7% correction should be a very normal one in markets.
Fine, yeah. So, which is why I was asking, Pankaj, are you working with that assumption that we could see about a 5% odd correction in the markets currently? Because a 5% on the index would typically translate to maybe around a 15 odd percent correction in select broader end of the market pockets as well.
Yeah, that's very much possible. See, but we have to see it in the context of the fact that the kind of gains that equities have made, we have had many. The whole mid-cap and small cap space has been on a tear over the last 6 months, partly driven by liquidity and partly by improved performance of a lot of those companies or sectors. We've seen stocks which have gained like anywhere between 50 to 150% over the last 9 months. So if there is some pullback in some of those stocks and there is some profit taking by investors who've been sitting on all the gains, I think that should be healthy for the markets.
Mm-hmm. But we keep hearing this logic about the consistent SIP flows and how there is a strong bottom in place. In any correction, 100, 200 points max, and then buyers come in. What's your take on this? Is it really possible for markets to give a significant correction in this backdrop?
Corrections they tend to happen at times for very fickle reasons. Globally also, while equities have and risk assets have done well over the last 9 months or so, we are seeing some sort of a risk-off trade that's playing out globally, where some of driven by the let's say withdrawal of liquidity by US Fed and some of the other global macroeconomic factors. So I think we are actually seeing a risk-off trade playing out globally. And India being part of emerging market basket should be very much part of that. So while I think those corrections will play out whichever way they play out over the next few weeks, I reiterate that if you look at globally, India is amongst one of the very few countries which actually executing structural reforms. And the benefit of that when it translates into economy over the next few years is going to be immense. And I think both foreign portfolio investors as well as institutional investors locally will use this correction to invest more into the market with a slightly 2 to 3 year time horizon.
Do you expect that risk of trade to really start with some volatility in Forex or US debt market? Where exactly do you see the pressure points?
So I think essentially what we've seen over the last 3 or 4 quarters has been a Goldilocks kind of environment where global growth has not been too strong, neither it has been too mild. It's somewhere in the middle in a sweet spot. But now with, let's say, the US Fed changing its stance and markets building in another rate hike before the end of the year, dollar, which has been unusually weak over the last 6 months, should probably regain some strength. And if that happens, then you can see some weakness coming into emerging market currencies. And that will have a rub-off effect on financial markets across the board. And also U.S. markets have done exceedingly well. U.S. equities have done exceedingly well over the course of the year. So there could be a round of profit taking there as well.
By the way, just for the benefit of our viewers, we're not trying to scare people out here, just trying to put some perspective into what could be the course of the markets over the next few days, weeks, keeping in mind the small bit of correction that we're seeing. This may well get bought into as well, but don't rule out a 5% or a 10% correction is what Pankaj is saying. Pankaj, my one question to you is on the consumption pocket. If there is one space that is kind of bucking the trend, if you will, of the slowdown that we're seeing in the economy by and large as well, is consumption. Honda, great response to festive season. The other two-wheeler makers have not been sounding too bearish either. Hero MotoCorp, ahead of all of this, was quite hopeful about the next 6 odd months as well. And truck sales in August have gone up about 42%. What happens to consumption, and within consumption, autos in particular?
Well, the outlook for consumption, I think, continues to remain robust. India is a secular consumption story, but I think you have a couple of factors playing out there. One, because of the GST-driven sales which most of the consumer companies had, a lot of those got preponed to the last quarter. And having said that, when you get into the festival season this time around, we have a low base because last year consumption was impacted because of the demonetization. So I think overall we'll see a growth in consumption, but it might not be as sharp as one were expecting. As far as autos are concerned, I think the outlook remains good. We already seen uptick in two-wheeler sales over the last few months. Honda and some of the other players have reported very robust monthly numbers. And I think the demand for autos across the spectrum, be it commercial vehicles or passenger vehicles, should continue to remain strong.
Where do you see the highest risk if markets indeed correct by 5 to 10%? Which pockets, could fall the most, and therefore one should exit right now?
I think we've seen very strong price gains in a lot of small cap stocks, and that's largely driven by liquidity at the retail end. And we've seen there a lot of weak hands buying into the stocks. So I think that's one space where we see some reasonable degree of froth exist in the market. So that's one space which one should remain wary of.
Okay. And my final question to you, Pankaj, where is it that you're most bullish on? Whether you buy or whether you recommend buying right now, or whether you go out and buy for your clients after a 5% correction, what is it that you would look to add, the most bullish pocket for you?
Well, as I said, in the short term, it's very difficult to time the markets. We rather follow a disciplined approach, and I think we're prepared for as I said, something like a 5 to 10% correction on the indices, which we think is very normal. We see we are pretty constructive on the outlook for the economy, and we think sectors which are related to the real economy, essentially industrials and corporate banks, should do well over the medium term to longer term. So that's where we see opportunities.
Okay, Pankaj, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. That's, of course, the view from Pankaj Murarka. Well, in a minute from now, we'll have the Capacite infra listing as well. Maybe Navneet and Agam would be ready in moments from now. We'll hand over to them for the FNO show. But just watch out for the Capacite infra listing. That should be an interesting one. TI would be the other one, Pradeep. But Capacite is the key one today. With the subscription and with what the pre-open rates were suggesting, I think this one is the key IPO to watch out for. And moments from now, in less than 60 seconds, I would presume, we will have the listing of Capacite Infra. Okay, and that's the management and the investment banking team getting ready to ring the gong. This one should keep investors who got a slice of the IPO fairly happy. And I think the listing has happened. Okay. Yes, 186 times is what the IPO was subscribed at. Not surprised that we'll have a good listing. The question mark is whether it can go ahead and move ahead. No, I think, okay, this, okay, let's just pull these rates off. But Capacite Infra will have a good listing for sure. So, and at different price points, I think we'll get you the analysis of what the market cap and the PEs would be. The management will speak to us at 10:05, so stay tuned for that. But for now, let's hand it over, or rather after the break, to Agam and Navneet to take forward the FNO show.
Are we live?